Today is Monday, June 12th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Started with the grain markets this morning, Mark, and Friday we saw a USDA report. Any surprises there?
I think the biggest surprise was the fact that there were no big surprises. As we expected, there were no changes to the new crop corn or soybean production estimates, with the big USDA stocks and acreage report looming here at the end of June. Exports were cut for both corn and soybeans as expected. Corn was down 50 million bushels. That was partially offset by a 15 million bushel decrease, in the imports. So net result, ending stocks up 35 million bushels, in line with our expectations. Soybean exports, they were cut 15 million bushels, exactly in line with what our thoughts were. So ending stocks rose 15 million bushels there. And both stock increases carried right through to new crop without the changes on the new crop 2023 production. New crop corn carryout at 2.25 billion bushels. That would be the highest in 8 years if realized. Right now we have a lot of weather to go through, obviously, before it's realized. And in South America, both Argentine corn and soybean production was cut by 2 million metric tons. And this was mostly offset by increases in Brazil. Probably the biggest surprise was in Friday's report was the fact that winter wheat production here in the U.S. did go up, but only by 6 million bushels. We were looking for more closer to a 45, 50 million bushel increase. Recent rains across the southern plains have enabled crop conditions to improve now the past 4 weeks. But with harvest in its very early stages, the next few weeks will really show if these rains were too little too late to salvage much of a crop this year.
Mark, we did have a little bit of much needed rain in the Midwest over the weekend. How's the weather forecast looking for the rest of the week?
Yeah, weather over the weekend, we did get some rains, I know, across parts of northern Illinois, but you get out in Iowa, much of northern Missouri, eastward across northern Indiana, Michigan. Rains were not as much as expected or much as we needed. There was better coverage across Ohio and Kentucky, but rains this week are expected to be lighter than average overall across some of these key growing areas. Temperatures are expected to remain mild over much of this week. However, temperatures are expected to build by late in the week and into the weekend. So we look for pretty sizable drops in both corn and soybean ratings in tonight's crop progress report as the drought conditions deepen. And if this heat builds without much rain here looking out towards the end of the month, I think we could be setting the stage for a significant rally as weather premium is added back into the marketplace.
Alan, let's turn to the financial markets. What are the most important economic reports and events scheduled for this week?
Okay, well, first of all, we'll have the CPI for May tomorrow, and that's guessed at up 0.2%. Then on Wednesday, we'll have the May Producer Price Index anticipated to be down 0.1%. And of course, that also is the day for the FOMC meeting with a statement due at 1 o'clock Central Time. And
let's talk about that for a minute, Alan. The FOMC meeting, what's the expectation for Wednesday?
Well, right now, the belief is that the Fed will keep rates unchanged. In fact, there's a 75% probability that the Fed will keep their policy as it is. But there's the balance is for a 25 basis point increase. So there's a 25% probability of another quarter point hike. And also at the July meeting, the July 26th meeting, there is over a 50% probability that the Fed could hike by 25 basis points. So the Fed likely to be standing pat at the meeting this week, but a rate hike at the subsequent meeting is very, very likely.
Lastly, Alan, as you look at the S&P 500 futures, what are the major support and resistance areas there?
Okay, the next resistance comes in at the August 2022 high at 43.2750, which is not that far away. And I think we will soon be taking that resistance point out. But I think that After that, we have the next resistance coming in at 44.15, and that's a more formidable resistance.
Mark, I want to flip back to the grains just 1 minute. Where is the large speculative money right now when it comes to the grains?
Well, last week, both the index funds and money managers were healthy buyers in the ag space. That's the second week in a row now they have been net buyers. After having been short in the ag space for the last 5 weeks, money managers have flipped their position around now and have a modest long position. They still have short positions in Chicago wheat, or rather sizable short position there. Net short a little bit in corn and soybean oil, and holding long positions in soybeans, soybean meal, and Kansas City wheat. So kind of a mix there, but now back to being net long.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.